And we are in conversation with Jim Walker, Managing Director and founder of Asianomics. Jim, we've got a global sense of the big picture from you. Let's talk about India. Do you think Indian economy has bottomed out or it's too early to judge that?
I think it's too early to say that the economy has actually bottomed out yet. The capital expenditure cycle in the private sector has taken a real hit in the last year or so, and I think that's continuing. Everybody that I spoke to when I was in India in late February was basically saying to me, the investment pipeline is empty. Banks are making loans to companies that had already started capital works and started investment processes, but there wasn't anything new coming through. And that really says to me that we've probably got further downside in the economy over the course of the next maybe 6 to 9 months before it starts to bottom out. And that process will be helped by companies cutting back on capex and repairing their balance sheets, which I think will be a really positive development in India over the course of the next year. But I don't think we're quite at the bottom of the cycle yet.
Fair enough, but what's the view on inflation? I mean, we had in the RBI policy meeting just went by. The governor talked about monitoring inflation closely, but the indication that they would not go in for more rate cuts if the situation doesn't allow them to. How do you view the outlook on inflation? Because it seems to be easing, but it's still not in the comfort zone.
I think it's just out of the comfort zone and no more at the moment. But I mean, I think it is easing, and it's easing now relatively rapidly as a result of the slowdown in the economy. And I think we're beginning to break the inflationary psychology. If we look at the money supply and credit numbers, which we view much more as an inflation dynamic and an inflation indicator than the CPI and the WPI, they would both be telling us that we're going to get lower inflation in the consumer price and wholesale price areas over the course of the next 12 months. And I think given the way that the economy is acting, that's confirmed by the economy. So I actually think that the RBI is now getting some wiggle room and scope to lower interest rates. If only the government would further commit to fiscal consolidation and therefore clear the way for the RBI to take much more aggressive easing action, I think that would be really good news for both the outlook for Indian corporates and indeed the outlook for economic growth in India.
Jim, previously you've made a case and you've argued that there is merit in buying gold. After the recent correction in gold, do you think it's a good time to put money to work, or the super cycle in gold is over?
Oh, I don't think the super cycle's over. And as I said earlier, it won't probably be over until the central bankers that are in place today are long gone. I still like gold, and I'm obviously in the same camp as most Indians, given the latest trade figures, which showed a huge surge in gold imports when the gold price fell. That makes me think that India's got one of the most sensible populations on the planet, because they're buying the right stuff at cheaper prices. I'm there with them. The only problem, of course, in trying to buy physical gold is that despite the fact of what we see on our screens every day about the price of gold in the markets, when you go to a shop or a bank to try and buy coins or even small bars, you're finding a 15 to 25% premium if you can get the gold at all. So it strikes me that, in a sense, the price that's being indicated at the market at the moment, which is a market, remember, dominated by a lot of paper gold, is really a false price, and that in actual fact the physical price of gold is significantly higher. And my own view is that it will go much, much higher still over the course of the next 5 years. So I would be taking the opportunity of any weakness at all to try and load up in gold.
So are you a buyer in gold at the current juncture? Are you putting your personal money to work?
I've been buying gold over the last few weeks, and not much. I've got a lot of gold already, so I'm just adding to an already significant part of my portfolio. But I'd be buying at these levels.
Jim, if a client walks up to you with a fat $10 million check, he wants you to invest in only 3 asset classes, and if the time frame is 5 to 10 years, how would you allocate that capital? $10 million, 5 to 10 years.
Yes, that's a difficult one. I would certainly have 10 to 15% of it in gold. I don't think we need to put any more than that in. But I would take a large chunk of it and put it into the ASEAN economies just now, especially into the ASEAN banking sector, given that we think that the credit cycle in ASEAN has another 4 or 5 years to run. And the rest of it, that's a tougher one. There are some, I think I would say to the client, hold the rest of it in cash for the next 6 months or so until we see a much clearer picture in India about what's happening in the economy and what's happening with ratings agencies, potential downgrades of Indian sovereign debt. And if you see a downgrade and you see a good investment opportunity in India, then put it into Indian mid-caps, because they've been beaten up so badly over the course of the last 12 to 18 months. But I think there's a lot of value starting to appear there, maybe not quite at these levels, and certainly from a foreign investor's perspective, not at these levels of rupee and where the sovereign rating is. But I think they're very interesting companies within the Asian universe. And I wouldn't really bother having any money outside Asia, except for gold.
No, I just wanted to get your perspective on what you expect in terms of the ratings risk. Is that still there? Because S&P seems to be turning a bit favorable, especially on the asset quality among banks and also the growth projections.
The ratings agencies bother me. They're so far behind the curve most of the time. I think the ratings downgrade risk has increased. In terms of the fundamentals of India, I think the budget deficit targets will be missed for 2013 and 2014, fiscal year 2014. I think the growth rate will be lower than people are expecting. I don't know what they're looking at in terms of bank asset quality to make them much more comfortable with what's going on in India just now. I really do think that they're long overdue downgrading India. And the reason I say that as much as anything is that I think it would be the stick that's needed to beat the government up to get it to act properly going forward. It has been far, far too lax and relaxed on the fiscal position and indeed government policy generally. It hasn't done enough to lay the groundwork for future growth in India. And I think the only way that comes about for this kind of government is when is faced with something of an external crisis, and the only crisis that I think is on the cards at the moment is a ratings downgrade that would be doing India a big favour.
Jim, since your overall view is that we could be staring at lower prices in pretty much all assets with the exception of gold, let me reverse my earlier question. What are your top three, short selling ideas?
Copper would be at the top of the list of short selling. The yen, Japanese yen, and European banks. I think these are our top three shorts in our investment strategy to clients. I think certainly copper and the yen are fairly obvious given our view of the world. And European banks, I just think that people are completely misunderstanding how deep the crisis is in Europe and how big the private sector debt problem is there, which will result in much more in the way of bad debts in the European banking system. So we would be very short European banks.
When do you think yen will ultimately settle against the dollar? It has cracked 100 already.
Yeah. Well, I think next stop is 105, and eventually I suspect in this move we're going to go to between 110 and 120 in the yen. So I think there's plenty of time to get shorts still in there. Whether that causes significant geopolitical problems at that point, I think is a different question. But certainly the idea of the Japanese government just now is to get the yen down as quickly as possible, regardless of what G7 says that we're not targeting currencies. The Japanese are definitely targeting their currency and doing everything they possibly can to get the currency down. And they're succeeding at the moment. And they're succeeding because it's an open door and people believe that a cheap yen is required to revive the fortunes of Japan. So I think it's got a lot further to fall.
So from that perspective, wouldn't the call be a bit bearish across ASEAN currencies, perhaps even the Indian rupee, given that there's much talk about currency devaluation across the region on account of what's happening with the yen?
Really, the only countries that are in competition, if you like, with Japan, in fact, the most specific country in Asia that's in competition with Japan is Korea. And of course, the Korean won is now beginning to weaken as well. I would expect to see some weakness there as a reaction to what's happening in Japan. But the other country which is most hurt by the weakness in the yen, of course, is Germany, which is supposedly the powerhouse of Europe. And if the powerhouse of Europe is seeing its exports undermined by one of its major competitors, then it's just another drag on European growth and another reason to be short European banks. But I don't think that the decline in the yen in terms of ASEAN means that we're going to see significant downward movements in ASEAN currencies. The current account surpluses in these countries are really still very strong. There's an upward pressure on their currencies when we look at the fiscal, the foreign reserves position and on the current account side. So I'm not sure that the yen's weakness spills over into weakness in other Asian currencies. I think it spills over into weakness in the Korean won. Big problems for Germany.
Jim, I know I've extended my appointment with you, but it's ready to get you on ET now. So just one last question. If given an option to physically buy an asset class and store it, with the exception of gold, what is that one physical asset you would like to buy and just slip it under your carpet?
Oh, that's a good question. Apart from a castle in Scotland, I think really what I would be looking at the moment is buying a range of good quality, consumer-orientated companies in Southeast Asia, where I do think policies have turned around. The domestic demand story is now stronger than it even is in India and China, and where the companies, which have learned so much from the Asian crisis, are in such good shape that even at high valuations, I think over the next 5 to 10 years, they're a great investment opportunity.